What's up everyone, Mike Thornton here. On today's video, I'm going to tell you everything you need to know about the 2022 housing market and how to position yourself for success. There's a tendency to overthink the factors impacting the housing market. At its core, a market determines the value and price of items that interact with supply and demand. Now, given that, if we understand demand and supply and their relation to one another, we'll be able to predict trends in pricing. Assuming you don't live under a rock, you've heard the recent narrative from home buyers in America defining the real estate market since the onset of the pandemic. You've heard things like, there's absolutely nothing to choose from, or there's 30 offers on day one. There was a funny meme on social media that put it perfectly, and I'm probably butchering it, but it said, have an avocado, put it on the counter. If it browns before you receive an offer, you're overpriced. So you get the point. 2021 was marked by historically low inventory levels, and the question is, will 2022 be much of the same? Now, according to Altos Research, a company that tracks weekly home sales data in the US, there are currently 326,000 homes for sale in the US. That's just above the low point of 307,000 that we saw in April of 2021. So what happened? I thought we were going to see a flood of inventory once the forbearance program ended. Well, the problem with that is people took advantage of the forbearance program not because they needed to, but because they could. Now, that's not to say that some didn't really need that assistance, but a vast majority were able to get back on track with their mortgage payments following the end of the program. This is evidenced by the number of mortgages currently in delinquency, a historically low 3.9%. And even if those households were experiencing hardships during the pandemic, homes had already appreciated so drastically over the last several years, they likely had enough equity to sell their home, cover their cost, and even pocket a few dollars to boot. For example, owner's equity in the US surpassed $23 billion in Q2 of 2021, and that number continues to rise. With so few homes hitting the market due to distressed sellers or the forbearance program, the other main lever to look at as far as supply goes are new builds. Now, this has been challenged lately due to skyrocketing costs, extended lead times, and overall supply chain disruptions. New home sales in 2021 were just under 800,000 for the year, a slight trend down from 2020 and well below its peak in 2005 of 1.3 million homes. So modest new home construction activity in conjunction with very few distressed sellers paints a clear picture of where supply levels are going to be in early 2022. Supply will continue to be at historic lows. So now that we understand supply, let's talk about demand. There are two big factors impacting demand as I see it in 2022. The first of those is understanding the activity of baby boomers and millennials. Now, as you probably know, those are the two largest people groups out there, and they are both active in the market at the very same time. We expect demand from both those people groups to continue for years to come. Millennials are finally buying their first home, or they're moving into larger spaces as they start having kids. On the other hand, boomers are downsizing in preparation for retirement. Now, the second thing that I look at in reference to demand are interest rates. Now, the average rate for a 30-year fixed rate mortgage has risen 0.5 point over the last 7 days alone. Now, I'm taping this in mid-January, so that could fluctuate depending on when you're viewing this video. But at this point in time, it has risen 0.5 point over the last 7 days. That's a huge jump. 1 year ago, the average rate was 2.88%, and now we sit at 3.64%. Now, some important context here, that is still really cheap money to borrow, and I don't think rates are going to rise enough to have a serious impact on demand. Given these factors, here are my predictions for 2022. Number one, homes will continue to aggressively appreciate as supply remains constrained, demand remains high in comparison, and the rate hikes will likely be nominal and have very low impact on true demand. Now, another way of saying this is we are not actually in a housing bubble. Now, that day could come, we never know, but because demand continues to outpace supply, and that is what defines a market, this is not the top of a bubble, and I expect pricing to continue to rise at an aggressive rate. No doubt in my mind, the same house will be more expensive next year than it is today. Number two, Supply will hit all-time lows in the first half of 2022 as some buyer activity will be pulled forward as those buyers are looking at future rate hikes and all the conversation regarding the Fed and interest rates. Now, truth be told, I think some of that has already been baked into mortgage rates, but there's no guarantee there, and we could definitely see rates continue to rise over the course of this year. Buyers that hear about that and understand that may pull forward a little bit. We may see incremental demand in the first half of the year before those rate hikes continue. And because of that, in conjunction with all the other supply constraints that we have, I think we're going to hit an all-time low number of supply in the first half of this year. And number three, we will see an all-time record of real estate investors in the real estate space. So the way we'll get there is I believe that many first-time home buyers that are now trading up into larger homes won't actually sell their starter home, but will rent it out. They're likely locked in with super low interest rates. They see the rising rents in the marketplace. And some of those folks, especially those that eventually wanted to invest in real estate anyway, will use that as a way to get into the real estate investment space. So there you have it. Record low supply, demand driven by boomers and millennials that will continue to outpace supply, driving up prices to new heights, and the number of real estate investors will also get to an all-new high, and all of that will happen in 2022. I hope you enjoyed this video. If so, leave us a comment, give us a like, and we'll see you next time.